Hi guys, how are you? I hope all of you are doing really good. So, paper number 4, cost accounting, September 2025 attempt is done. And I was at the examination center, and it was really a pleasant sight, to see the students coming out with the happy faces that, sir, the paper was easy. That's what the students told me. All the students who studied from me in the face-to-face batch, they were there in the examination center, and they came out and the first words were, sir, paper was easy. Now, this is a short review of the paper, that how this whole paper was, what the ICI is actually expecting from you people. A short review, not a detailed or not a detailed solution. I'm not going for that. If I talk about the overall paper, it was, I'll say, easy to average, right? Towards easier side. This wasn't a difficult paper at all. This wasn't a difficult paper. But again, it is easy to average for those people who have been working on what? Who have been working on the concepts. Is the majority part of this paper is from the ICAI module questions. The only thing is they are testing you on the concepts by molding the questions a little bit. MCQs, I've just gone through, just had a one side, easy. Cost sheet, case study, right? Then it was, I think, marginal costing case study. Rest of the MCQs were also easy. It wasn't difficult. So this paper was easy to average, towards the easier side. Let me know in the comment section how was your attempt, how much marks you have attempted, the paper you have attempted, and what is your opinion, because it is very important to know how you think about that particular paper. For me and for the majority of the students whom I met at the examination center, it was easy paper. It wasn't a difficult paper. But I want your side also, that what you think about it. Let's have a quick review. If you talk about question number 1, this is a question from ICAI module, sir. This is a question from ICAI module, right? Here you have to calculate, you are given the data for 3000 units, for 3800 units you want to calculate for 4000 units. Material cost was a variable cost, wages was a variable cost, fixed overhead was a semi-variable cost. Then semi-variable cost was to be divided into variable cost into fixed cost, and accordingly the increase was to be done. Direct wages increased by 15%. The fixed factory overheads will reduce by 20%, right? So this is how it was to be calculated. Desires to earn 11% on selling price. Then you have to calculate what will be it on cost, right? Then calculate the selling price per desk in the month of June when the monthly output is 4000 units. It is a question similar to one in the ICAI module, where the 3 different values were given. Direct material was given, then direct wages. How many units were there? I think 1200, 1600, something like that. Similar question in the ICAI module. Next one, labor costing question. Very easy question, again from the module itself. Time allowed is given, time taken by 2 workers is given, ajoy and bejoy. Normal wage rate same for both. Bonus payment plan is given. Factory overheads recovery rate is given. Factory cost is given to you, 1,24,800, that is same, right? So factory cost was given, you were required to calculate the normal hourly wage rate and the cost of material. Same question from your module, sir. What was difficult there? Isn't it? Next one, standard costing. MD Limited has furnished the following information for the month. Standard variable overhead rate is given, rupees 3 per hour. Standard hours for 1 unit of production is 5 hours. Actual output is given 15,560. So it will be, what will be the standard hours for actual output? Standard hours for actual output, it will be 5 multiplied by 15,560. Standard rate, variable overhead rate is given as 3. Actual output, variable overhead efficiency variance is given, and variable overhead expenditure variance is given to you. Then standard fixed overhead rate is given. Then actual fixed overhead rate is given. Easy, sir. You can calculate. Actual hours you can calculate. Actual variable overhead rate per hour you can calculate. Variable overhead cost variance, rate variance and efficiency variance is given to you, right? So you could have calculated, sir. Easy. You could have calculated standard hours minus actual hours into standard rate. What is that? What is that? That is efficiency variance. Use the efficiency variance. Using the efficiency variance, you could have calculated easily what? The actual hours. Using efficiency variance, that is standard hours for actual output minus actual hours into standard rate. You are having standard rate, you are having standard hours for actual output. Right? And once you get actual hours, the other figures you can easily calculate, sir. So this was not a difficult question. Again, 4 marks. I would say easy one. Coming to the second question, toll plaza question, similar to the one in the ICI module. The only thing was here they divided the vehicles into 3 categories: passenger, heavy commercial, and buses. So in this question, rest of the things were easy. Cost you have to calculate. Then expenses were given. Calculate the total cost per month for the toll plaza. Very simple, straightforward total cost. Take the total of all the cost. It is similar to the one which is there in the module. I think illustration 10 is there. The company aims to achieve 20% margin over the total takings. Calculate the toll rate to be charged for each type of vehicle. Now here the toll rate was different. So you have to apply the concept of equivalent vehicles. Equivalent vehicles. Convert heavy commercial into passenger vehicles. Convert bus into passenger vehicles. Then calculate whatever is the total cost, add a 20% profit on the selling price. 20% is on the selling price. Please be very careful. On the total takings it is given, that is 20% on the selling price. So add profit, you will calculate the total takings, then convert it into vehicles. First thing was calculation of equivalent vehicles here. Right. Sir, B part. What should I say about B part, sir? Simultaneous equation, not even asking for the full secondary distribution, only asking you to create 2 equations and solve it. 4 marks. That's it. Free fund. S1, S2 is given. Just create the equation here. That's it. That's it. S1 is equal to, what is the cost of S1? That is given 1,60,000. Right? Plus 10% of the services that was provided by S2, and S2 will be 2,40,000 plus this services that he has taken from S1, 0.20 S1. You have to solve this and calculate S1, S2. You are required to apportion the expenses of the department S1, S2, calculate the total expenses and then apportion 25% to P1, 35%, 20%, secondary distribution by simultaneous equation. Nothing can be easier than this. Isn't it? 4 marks. Very simple, straightforward question. Okay. After that, ABC also was not difficult. ABC question was also not difficult. If you look at the ABC question, everything was given. The management 8,10,000 cost driver number of projects. Take the total of number of projects 40. So this divided by 40 will give you the CDR. 8,10,000 divided by 40 will give you CDR, sir. 250. Consultancy hours. Take the total of consultancy hours, divide by total number of client meetings given. Software development hours given to you. You calculate the CDR and then put it into the 3 segments. That's it. Technology, healthcare, and education. The fees charged per project is as follows. Cost you can calculate by ABC and then calculate the profit. This is basically the selling price that is given to you, right? Cost you will calculate by applying the ABC method. Then you have to calculate the profit. It says prepare a statement showing the total cost and per project cost of project management for each of the sectors. Using the ABC, identify the most profitable sector based on profitability percentage on the fees charged. Nothing. I mean, not even a single point which I can say is very difficult. No, sir. This B part is good. B part definitely I will say this is a question from marginal costing. This was a question from marginal costing, that is limiting factor. Marginal costing, limiting factor question. Here the raw material was the limiting factor, that is 1,10,000 kg, and the maximum capacity is 5,000 and 3,500. This also was to be considered. First, what you will do, you will calculate contribution per limiting factor, right? Calculate the contribution per unit, then calculate the raw material consumption per unit. That was 10 kg and 20 kgs. For 1 unit, how much of the raw material is required? Then calculate contribution divided by 10 kg and then contribution divided by 20 kg. That will give you the contribution per kg of the raw material being used. On that basis, you will do the ranking. Okay, this product is to be manufactured first. So how many units you can manufacture? Let's say A you can manufacture. So 5,000 units you will manufacture, multiplied by 10, right? 50,000 you will consume in the manufacture of A, right? I'm just assuming, I'm not giving you the solution. I'm just assuming that this is how it is to be done. Then out of 1,10,000, 50,000 is consumed. Let's say 50,000 is consumed. So in the remaining 60,000, how many units of the B you can manufacture? So this was a marginal costing limiting factor question. Good question, but I don't think so that it was too difficult that you people would not have attempted. Contribution you would have calculated, sir. Selling price, all the variable cost, you will get contribution per unit. Then calculate what is the raw material consumption per unit. Per unit. If you are calculating contribution per unit, then raw material consumption will also be per unit. Then contribution divided by raw material consumption per unit. You will get contribution per limiting factor. On that, ranking and then manufacturing, keeping in mind the maximum capacity also. This is another important point, right? Okay, coming to the next one. I think this was budgetary. Yes, production budget. And this was, I think, somewhat similar to the question which is there. This question was on budgetary control. But to be done carefully, this was a good question. This was a good question, I will say, where you have to identify the production in units, then based on production, raw material consumption in quantity for the next year, total machine hours, including the maintenance time required for machine A, machine B to manufacture product A1. Yes, a good one. This question I would say was good, right? Reasonably good question, sir. Yes. Right. So based on the things, opening stock of finished good was given, closing stock of finished good was given, the production pattern was given, that 80% of the sales of the current quarter and 20% of the next quarter, right? The company maintains this. Now, first, what you would have done here? It is a similar question to the one done in the module. First, you will take the total of this sales, right? Total of this sales you will do. What you will do is sales. Then you will add closing stock here, subtract opening stock here, and then you will find out the total production. You will find out the total production, then total production was to be split in the 4 quarters, right? In quantity, quarter-wise production budget. For this production budget, the first thing was to calculate the total production units. Then this was to be split into 4 quarters, 1, 2, 3 and 4, right? So this was the question. Based on the production units, then your consumption of the raw material would be there. Okay, fine. So this was budgetary question. Where is 5th question? One question, this, sir, non-integrated system of accounting. Sarji, very easy, and just the journal entries they are asking. Yeah, journalize the above mentioned transaction. Material purchased on credit, sir. The non-integrated system, material issued to production, direct wages allocated to production, sir. Factory overheads over-absorbed. Factory overheads over-absorbed. Then you would have taken it to assuming it to be normal or abnormal. Assuming it to be abnormal, take it to costing, P&L account, right? Administration and overheads under absorbed, because in the over and under absorption, what we do is either we carry forward to the next period or we take it, assume it to be abnormal and take it to costing, P&L account. So we would have taken it to costing, P&L account, sir. Very simple journal entries. Next one, 5th, A part. Sir, what would I say about A part, sir? Number of units, total cost. Storekeeper of the company argues that he has taken proper care of storing 3 raw materials, MA, MB and MC as they are in the bulk quantity. He further argues that only a few units of material Mg, Mgh have been deteriorated due to bad weather. Right? The management wants to get him aware about the value of the different items. Rank the material and draw ABC selective control on the following basis. Sir, 8 marks. ABC 8 marks. Total cost is given to you. Not even per unit cost. Total cost is given. You just have to do ranking. 1, 2, 3. Rank and 50,000 and above, A category. A category. A category. A category. This is then it was 15 to 50,000. B category. B category. Then this was C, 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 C. That's it. You just have to prepare and then tell that storekeeper was not correct, because these are the C category items. High value items are these A category items. More control was required on these categories because of the high value and not the number. You would have explained, if you have explained a little bit about the ABC, that why the storekeeper is wrong and how the management can help the storekeeper identify which items are important, you will definitely get some benefit out of it. Right? EOQ question, sir. Straightforward question. EOQ 3 marks. Straightforward question. Material costing. Right? Electronic gadgets and user specialized component. Incur's ordering cost is given. Carrying cost is 25 per unit per annum. Annual production is 90,000 gadgets and each gadget requires one component. So A is 90,000. O is 1250. And C is 25. Economic order quantity you can calculate. Right? Complete the table regarding the accounting entries pertaining to over or under absorption of overheads. Under absorption, stock of finished goods account. Right, over absorption, stock of semi-finished WIP account, and under absorption, that whether it should be debited or whether it should be credited, and what is the formula, calculation of the amount formula. Calculation will be what? Units multiplied by supplementary rate. This is how it was to be defined. Well, so based on this, I can say the paper was easy, sir. The paper was not difficult. Scoring 60 plus, 70 plus, even 80 plus in this kind of a paper is not difficult, provided the institute is doing a good checking, right? So in easy papers, normally what they do is they will go for some kind of a strict checking, but if you have written it correct, then nobody can mark it wrong, right? So all the best for the rest of the paper, guys. This was a short review of the cost accounting paper. And whatever has happened has happened. Do not think about it too much now. Focus on audit and FMSM. If you have done a few mistakes, the silly mistakes or something, just try to cover up a little bit in the audit and FMSM. And this doesn't mean that if costing paper is easy, so audit and FMSM will be difficult. No, it is not necessary. So we are hopeful that audit and FMSM will also be easy like this one, right? So all the best, guys. God bless you all. Thank you so much for watching this lecture, and do share with all your friends. God bless you till then. Stay safe, stay healthy, keep studying, keep sharing. Thank you so much.